Hi, this is Harry Dent. Just wanted to give another update here on February 22nd. In our newsletter, we've been looking for a short-term top and the first significant correction in a while to come somewhere between mid-February and mid-March. And this may be starting here on the 21st and 22nd of February. We've got riots and violence in 7 countries across North Africa and the Middle East. Bahrain is probably the most scary. And of course, we've seen dictators being ousted, Egypt, Libya, Tunisia, places like that. This is something we've been saying would happen in the winter season. A lot of dictators around the world would be sooner or later thrown out of their country. So this is short-term turmoil, which is bad for the market, but it's long-term good for these countries. We see oil prices spiking here. We've had a long-standing target of around $100 for oil in this bear market bounce. Gold, we've been saying, looks like it's got a final rally ahead of it that'll take it to $1,500 to $1,550, and then we could see a major long-term top in gold and silver and also possibly in oil. So major transition here. Since the government came in with this unprecedented quantitative easing, now QE2 they call it, since August of last year announced, this money's been going into the banking system and pushing up almost all assets. It's been pushing up precious metals, gold and silver, been pushing up commodities to some degree, and particularly stocks in the U.S. and around the world, and particularly in the U.S. This money is just going into higher yield investments. It's going into higher yield bonds as well. This money is not being lent, which is the purpose of stimulus supposedly. It's just keeping bank profits up and allowing them to reinvest at higher rates of return. They get money for free from the government, or they sell bonds to the government, turn around and invest in higher yields. This is not good for the recovery. It's not a sustainable thing, but it is working for now. Now, the flip side of this, we know we've been bearish for a long time saying this recovery would not last past the point, this bear market rally would not last, but our indicators now are continue to say that this does not look like the stock market's going to top for a while. It's probably going to be at least sometime well into the summer. Late June or August is our best targets now, and it could be later than that because we got a lot of indicators that you expect to diverge from each other near a major top, and these are not showing now. So again, we think this is a short-term top. It could be a major top just ahead for precious metals and emerging markets, but it's going to likely be a short to intermediate term buying opportunity for investors who want to get back more in stocks, because we could see the S&P go from a recent high of 1344 down to somewhere around 1250 to 1280. It's been going up in a wedge pattern, much as it did into January of last year. It came out of that wedge and then hit a final top or short-term top in April of 2010 before we saw a more significant correction. We've got another wedge building here that seems to be topping. We think we correct down out of this, and then we go into a final rally into the summer. That could take the S&P to at least 1380 and probably more likely something like 1430. So this is still a significant rally ahead. We're probably going to be warning to give buy signals for stocks in the coming weeks, sometime and probably in mid to late March to early to mid-April. And this correction, again, could last a number of weeks and could set back 5, 6, 7, 8%. So we'll have to see on this, but some major changes in the markets. Very likely no longer gold, oil, silver going up with stocks. Stocks now may go up in the United States after correction, and gold, silver, and oil may eventually come down. Emerging markets are suffering from food and energy inflation. China and India, countries like this, are having to slow their economies, while the U.S. is still stimulating very, very heavily in our economy. So again, important turning points ahead, and we'll look to give you more alerts sometime in the next month. Thanks for listening.